All right, folks, welcome to our 1, 2, 3, 4, I think 7th This Week in Crypto of 2023. And it's been a wild couple of weeks in particular for the markets, but things really heated up really just in the past 3-4 days or so. And we're going to get into as many metrics as we possibly can here over the next hour to an hour and a half. Maxim will be joining me momentarily. He's finding a quiet room for himself, and we're going to try to go over exactly what to make of all of the volatility, because we've seen a few pretty crazy waves here. Obviously, around the 22nd or 23rd of January, we peaked up around 24K for Bitcoin before ranging in the 21 to 23K range for the last 3 weeks. And then we finally took one more leg up, going above 25K, particularly 25.2K, for the first time since June of last year. That's a big deal. And there were quite a few explanations as to why. We've seen that BUSD is in hot water, but perhaps that's actually benefited crypto's prices, at least temporarily. Tether, tons of accumulation going on. Bitcoin at least able to range, even if whales may not be going crazy and accumulating a ton. They certainly have stopped their hemorrhaging that they were demonstrating pretty much all of 2022. So there's a lot of reasons to be optimistic, a few reasons to be concerned potentially in the short term. But let's start here with our price returns over the past week. We obviously had another nice week for Bitcoin, with it making an 8-month high, 9.3% up over the past week. Ethereum 8%, been pretty quiet itself. Cardano plus 10. And then look at all these huge gains we had. Hex actually, I saw yesterday there was a post about how Hex is getting more buys and volume than Shiba right now, which is a big deal because Shiba's market cap is obviously in the top 15 or so, while Hex arguably is all over the place depending on the person you talk to. But yeah, Hex has been a big story. OKB, the native token for OKX, it's been doing really well at plus 34%. Filecoin 42, Internet Computer 32, Phantom 25, Flow 18, Rocket Pool 18. We did a review on Rocket Pool last week, and it's just continued to rise here. It's honestly a lot of new faces here in the top 100 market caps that were not here a year ago. Dash 24, Clayton 24%, Curve 17%. So there have been quite a few rises all over the place. Kind of still an altcoin market, but you can see there's been a lot of separation, right? While one coin may be up 42% over the past week, the coin right next to it, Bitcoin Cash, up 1%. A few of them even down. Obviously, this one makes sense. TMG is up almost, I believe, quadruple what it was a month ago. And we mentioned it in the mid-month update that I'll get to in just a moment. But you can see here, tons of separation. Bitcoin and Ethereum kind of splitting the middle like they often do. 8 or 9% isn't the worst, is not the best, obviously, but plenty of altcoins were well below it and plenty were absolutely soaring. So we can figure out why. To a certain extent, there's a regression to the mean, right? We just spent a year watching prices plummet all over the place. And of course, all of these assets plummeted a whole lot more than the top two in Bitcoin and Ethereum. When that happens and Bitcoin and Ethereum finally starts to steady out and even rise, as Bitcoin has back up above 25K temporarily before settling in the high 23Ks where it is now. Yeah, there, to an extent, it's just going to be math where altcoins are going to recover a bit more than Bitcoin because they fell a lot more than Bitcoin. It doesn't mean that it will continue. Historically, if we zoom out to the lifespans of the average altcoin versus Bitcoin, Bitcoin usually wins. So it depends what kind of time frame you're on. I'm sure many of you have dabbled in some altcoins over the past week after noticing just how much they've been breaking out in 2023. Just understand that they can go either direction at any time, even within the altcoin market. As I pointed out, tons that go way up, tons that are barely moving, and some even going down. So it's very important to be paying attention to the on-chain metrics, funding rates, usage, MVRV, the average trading returns. It's very important right now to keep an eye on. But yeah, Maxim, if you're there, I'd love to hear your take really quick on what you've seen.
Yeah, I'm there. I'm here. We should always remember that the market is here to confuse us. Yeah. The moment we are getting too confident or convinced where it's going, we have trouble. So, in a sense, being in the current situation where we're not sure, is it now for correction, which eventually should happen after growing for quite good percent since the lows? Has it started? Has it finished? Yeah, so there is some confusion. Even noticing my analysis when it was market. It's a good sign. Yeah, it's a good sign. So we can probably make some good decisions. Yeah, while now we're walking through the metrics. To start with, I was thinking when we last week before we started that it's time. Well, I was thinking for maybe 5 days before really this correction for 10% or even less than 10%, around 10% happened. It was time, but then it was so short. So I was confused that it's too short, both in price distance and in time. So it's not excluded, that we might get extended correction now. So we'll revisit the recent lows and just to confuse people and shake out this confidence which we are seeing across the board. It's not excluded, but let's see. Also, as you mentioned, if HEX are pumping, if Shiba Inu are pumping, it's never a good sign.
Doge.
Usually it happens at the end. It's not how things start. So we might need to chill a little bit. Yeah? Well, this little bit can be, as the last time it was just 3 days. I mean, it was very short. I would still think normally that will be at the moment. I don't know. Bitcoin around 20,000. No, we're still quite high, 24. So when I say we need to chill out, it might be short time, just 3 days, but we really need to do it. Too much confidence.
Yeah,
you see it in the price action, or especially where that happens.
And sentiment's really been all over the place, hasn't it? I've seen, extreme bullish takes as well as a lot of calls that this is all a big bull trap. And when that's the case,
wait. Do you say that you've seen like recently, today and yesterday, that this is a bull trap? Have you seen this?
Yeah. Oh yeah.
Okay.
Crypto Capo was actually viral, and he was talking a lot about it being a bull trap. Everyone is laughing at him right now, which oftentimes means we're at a top, right? If everyone is making fun of the person, saying that it's bearish time, it very often leads to that person.
If he said did he say it's a bull trap? It means he was predicting bearish movement,
correct?
Right?
Yep.
And no one wanted to believe him, or what?
Exactly.
Okay.
They're all laughing because he's been calling this a bear or a bull trap all year long. So as prices have risen,
okay. And now finally it's like wolves, yeah. No one
exactly.
believes anymore, and then they're coming. Okay, interesting. Any more examples from this area?
That's the main one I saw. I mean, I've seen plenty of people with very, very extreme opinions in both directions. Capo isn't the only one who's been saying this is a bull trap. There are plenty of people who are, but it's kind of like you have nothing in between. It's either everyone feels that we're going straight to 30K now that we've broached 25K, or everyone believes that this is all kind of a inorganic pump that is designed to make traders have the same confidence they did in 2021.
So, okay, then let's start from this initial point, suspicious. Yeah, and let's see during the call as we look into the metrics if we change our opinion.
Absolutely. Yeah, as many of you may have seen, I posted a mid-month report. So this is a good thing we can go off right today. 30-day returns are about where they were last night, about 8 to 10 hours ago, and I posted this. I mentioned TMG being almost quadruple what it was 30 days ago. So that's been the big story. You can see Hex, as Maxim mentioned, almost double. The graph more than double. Mina, Immutable X. You can see plenty of examples, but just look at how differentiated they are. I mean, it's even more extreme on a 30-day scale, where some altcoins like Monero and Luna and Bitcoin SV, they're actually down over the past 30 days when you have others, at least 5 here, that are either right around double or even quadruple. So that's pretty rare, and it doesn't happen a lot. Usually altcoins are staying pretty compact and close together. And this tells me that, if there's ever a time to be paying attention to on-chain metrics and social metrics on Santiment, it's right now, because it gives us an idea of whether the ones in our portfolio, will be the ones to take off, or whether they're just going to be middle of the pack or even the bottom of the pack. And take a look at the correlation here, Maxim, between Bitcoin, the S&P 500, and even gold. They all basically topped all together here right at the beginning of the month, February 1st, all slid down. And then crypto is the one that really took off without as much help needed this time from the S&P 500. You can see the S&P hit its 3-month high right here, but crypto hit its 3-month high right here. I mean, this is an 8-month high actually. So yes, there's still a correlation. You can see pretty clearly they're tracking fairly close to one another, but is it as much now as it was, back in, December, when things really latched onto one another? I don't think so. I think the correlation is showing more and more signs of breaking and allowing crypto to move on its own.
From looking at it, they all indeed made the same date top and started to correct down. But crypto deviated and pushed up where the gold keeps sliding down. Mm-hmm. It speaks, well, we need to wait what will happen by the end of the day. But yesterday it was declining. Yeah? And that's interesting. That would be, it's not necessarily a healthy sign short term when you see deviation. And only one asset class, in this case, crypto, is capable of pushing up, whereas others say, no, we're too tired. Yeah, so short term, you should expect it's easier for the market to say, okay, now crypto also go down. Then for all other tokens, you need to go up. But long term, it's a very good sign. Yeah, it's been frequently moving on its own. Crypto, just people forget about. And if we see this behavior again, that might mean something, that crypto finally maybe either recovered from big troubles, or mostly recovered from big troubles and just starts living its own life.
Yeah. And I like seeing that there was a higher high made here for Bitcoin, while a lower high was made here for the S&P. Those subtle differences can add up to great importance when you're looking for hints of a breakout. So if we see more of those types of deviations, it increases the probability of Bitcoin climbing up to 30K and beyond again, like so many people are hoping. Also, take a look. I mentioned Tether being a big story. Normally, Maxim, what I do is I look at $100,000 USDT addresses all the way up to 10 million. But in this experiment, I added the 10 million to 100 million, and it actually showed arguably a better correlation than if it was just up to 10 million. You can see very clearly here, big Tether whales, they started taking profits simultaneously when the price plummeted in May and June, and all of the FOMC meetings were happening that were pushing interest rates up and up and up. And then you can see, this would be kind of the bullish divergence that was beginning here as accumulation began all the way back in the very end of June, or I should say July, price didn't go up as accumulation started. We had the FTX collapse right here. And then prices stayed very flat as there was a ton of uncertainty in the market. Traders were wondering which exchange would get, imploded next, and everyone was moving to self-custody. That's fine. In the long term, moving to self-custody is good, but there was a ton of fear right here. Meanwhile, whales weren't fearful at all, apparently, because they were just accumulating lots and lots of tether. So much so, in fact, that since December 7th, their bags, just in the past 10 weeks, are up 16% in terms of their tether here, tether held, I should say. And if you look at the post that I put up about it, you can actually see that equates to $2.74 billion of accumulation. That's not chump change. That's a lot of money that can at any time be injected into crypto. Go ahead, next.
No, that's true. It's a good sign or good side you're looking to it from, but also important part which I believe us as a behavior analytics need to always pay attention. If on the growing market we keep increasing or we see increasing holding of stable coins, it means people still not fully in, as you say, but why? They're kind of not convinced.
Right. Yeah, there's hesitance, absolutely,
yeah,
especially when you see
hesitance is good for growing. The same way as confidence and excitement is bad. Yeah,
exactly.
So yeah.
And you can see when you compare what was going on with Tether to what's been going on for Bitcoin addresses, we're looking at three key tiers here: 100 to 1,000. 100 to 1,000 here, 1,000 to 10,000 down here, and 10,000 to 100,000. There's actually not much movement at all. This is about as flat as you can be in terms of whale behavior for Bitcoin. It's not really moving in either direction. And you can visualize all of those groups together. We're actually looking at 10 Bitcoin, which is kind of the bottom end of sharks, all the way up to 10,000, which is the top end of active whales before you start getting into exchanges and stuff. And you can see, there was definitely a slight rebound after all of this hemorrhaging, beginning in late November, going all the way up to mid-January. And then after prices, got above 20K, even prior to that final 24K leg up right there, whales were already starting to take profit again, and they diminished their holdings. Now the difference is they've been diminishing their holdings while adding to Tether, which in this case is highlighted in red. You can just look on the same chart. So you can see here, Bitcoin and Tether went down together. Tether accumulation started, like I said, in very late July, while Bitcoin was still going down. So this is kind of neutral, right? When you have Bitcoin going down, Tether going up, kind of a wash. However, right about here, especially, I guess I should say right here, that's when we started seeing accumulation for both Bitcoin and Tether at the same time. So the buying power for the top stablecoin in crypto has gone way, way up, especially due to BUSD's collapse, or at least dumping of many whale tokens over the past few weeks. That's just aided Tether's market cap held by larger addresses. But now we're seeing Bitcoin going down again, Tether continuing to go up, price still moving up slightly, but certainly not the kind of movement that we saw the first 3 weeks of January. So it's a mixed bag right now. I still think overall we're in a good spot as long as stablecoin buying power continues to increase, and over a third of Tether's supply is now held by $100,000 to $10 million wallets. That's a very good sign and indicates that there could be future buys coming that can pump markets all the way up to 30K and beyond. But yeah, speaking of BUSD, we talked about this big story, which obviously came out at the beginning of the week and kind of shook the markets. The US SEC plans to sue stablecoin issuer Paxos, which is behind the Pax dollar, and more importantly, Binance USD. They're suing specifically over BUSD, essentially calling it an unsecured, unregistered, I think they called it an unregistered security, or something where they would have the right to sue over unpaid taxes and things of that nature. So with that said, BUSD, the trust in that coin immediately took a nosedive. You can see it illustrated quite clearly by the whales in this orange line who were dumping it. And there was a huge spike in social volume too. This was an all-time high spike for BUSD, which normally isn't really talked about that much. It's really best known as just being a convenient stablecoin for the top exchange in the world, Binance. And it isn't talked about unless there's some concern about its solvency or its validity or its future existence as a top 4 stablecoin. So interestingly, Maxim, I saw that the spike in BUSD, which arguably is what pushed the markets down just a little bit as people got fearful of the overall markets right here. But on the tail end of this spike, that was the local bottom. This was February 13th when it occurred, and all of a sudden, prices just exploded. So the theory that would probably be hard to prove, but my theory is a lot of people in BUSD, instead of just switching to Tether, said, you know what? I just saw what happened in January. Maybe we can have prices go up again. I'm just going to swap the stablecoin into some Bitcoin or into some Ethereum or into another altcoin on Binance while it's here. Sometimes the ultimate lazy move, instead of actually withdrawing your funds, is to just say, I'm going to swap and buy some crypto, even though I wasn't planning to, until this BUSD story came out. And now that it did, I think that there was some buys going on, perhaps not from big whales, because we saw that Bitcoin is basically staying even at the moment. But I do think that there were probably some positions that were opened as a result of this. And of course, Tether undoubtedly benefited. You can see how right here, this was February 13th, there was another big increase, the third big one of pretty much the last 2 months. So I think that that actually aided crypto. But at the same time, we have to be careful about getting excited for the long run if BUSD and the story that came out was what aided this, decent sized 8 to 10% push from Bitcoin. It could be a very short-term thing where people get overhyped due to something inorganic, which is fear over a stable coin, causing a small contingency of people to just conveniently buy. But yeah, that's my take on that. We can also see Bitcoin's supply and exchanges continuing to move 2 different directions. This is the past 1 year, with the red being the amount of supply on exchanges, yellow being the amount of supply off exchanges. And you can see they have tapered out a little bit. You're seeing a slight rise here over the past week. Not much though. There's still something like a 14x ratio of supply outside versus on exchanges at the moment. But watch to see if this creeps up more. Obviously, the long term is overwhelmingly coins moving more and more into self-custody. But especially if you see, prices start to rise all the way to 30K and even beyond, that is undoubtedly going to be a lot of people's target price to sell their Bitcoin or finally get out after a year of watching their portfolio hemorrhage. So prices go up, you'll likely see the supply on exchanges begin to rise again. But while it's so down, that's generally a good long-term sign still. NVT, take a look at the 7th straight month of red here. This indicates that the amount of unique tokens moving on the BTC network is still underwhelming compared to where they should be for this current 25K, 24K price level that we're at. It certainly doesn't mean that prices can't go up. We saw right in our last stretch of 7 months of red on this model, the red did indicate that we were about to see a top. It got that right. And then there was a bit of a rebound despite the fact that we were in red, and it actually was able to still make one final all-time high, which in hindsight looked pretty inorganic to me, and then fell off a cliff, even when circulation was starting to get better. So take this with a grain of salt. It's certainly not a perfect model, but I do think that it holds a lot of merit in terms of its history of getting things right when we're in these red zones and getting things right when we're in these green zones. So yeah, we still are rooting for Bitcoin circulation to get a little bit better, and we'll look at it in more depth in just a moment. I also mentioned that the Bitcoin and Ethereum ratio of daily on-chain transaction volume and profit to loss is still very high, a little more so for Ethereum. Bitcoin is at least, back down to earth a bit right here with about 1.5 to 1 ratio of transactions taken in profit right now versus taken at a loss. That means any trades where the coins moving out are above the price where they started in that address, that's considered a profit transaction. If it's below, that's considered a loss transaction. Right now, they're still in profit. We'd prefer to see it down here. You can clearly see that's where bottoms typically form. But obviously, all of this green happened while there was a lot of profit taking going on. So there can very well be exceptions to the rule. I would just be concerned with too many consecutive weeks where the ratio of profit taking is significantly higher than the loss taking. Ethereum, of course, as mentioned in red or magenta, maroon, whatever color settings your monitor is on, yeah, they've had extremely high profit takes. And despite that, Ethereum was just above 1,700 a day ago. And just like Bitcoin, be very concerned when the ratio is this high. When the screenshot was taken last night, we were at, about 2.2 Ethereum transactions in profit for every one transaction at a loss. So that's a lot because we basically see this ratio hovering around even most of the time. And I'm always concerned when you start seeing, 7 straight weeks of both Bitcoin and Ethereum having a profit ratio that's significantly higher than the norm. Funding rates, let's take a live look just to see if anything has changed since the posting of last night. It doesn't look like it. Everything is basically in red and yellow right now. Not anything egregious though. It's pretty flat at the moment. There's a few big longs going on. It looks like traders are expecting Litecoin to have a potential breakout, which lessens the chance of it having a breakout because of all the money that's placed on longs right now. It looks like Binance Coin is actually one of the few that's kind of right at break even instead of slightly long. But yeah, there really aren't too many anomalies here at all. MVRV, let's take a live look at that as well. Yeah, it's pretty much the exact same. Mostly semi overbought to overbought right now, which makes sense because even this morning, my time, I've seen more altcoins start to break out. It's doing a refresh now, but you get the idea. Prices tend to have a harder time continuing to go up when you're seeing mostly orange and red right now. Doesn't mean they necessarily are going to correct, but this, at very least, points to a likely scenario where things taper out for a bit and maybe stay flat as the trading crowd decides to get a ton of FOMO or a ton of FUD right now, or stay exactly where they're at and keep their sentiment the same. And then last but not least, actually that was the last image. Why don't I do this? Let's look at some of the key metrics for Bitcoin now as promised, beginning with trading volume, which has risen going into this latest leg up, which is a good sign. It's certainly not an extreme rise though, right? Like most of you, especially if you're from the TA community, know that if volume is going up as a price trend continues, that increases the likelihood of the price continuing to move in that direction. So it has done that. This was definitely a bearish divergence because we had this big leg up, but trading volume was going down right there. So this is what I'm talking about. That's a bearish divergence. price going up, volume going down. This is pretty much expected and allows prices to continue moving up if the volume continues, on a more short-term basis. We'd have to zoom in, which I won't bother doing right now. But it does look like trading volume is supporting this rise. I don't know if it's enough, though. I would expect probably a larger slant that's more, in this range at least. And then on-chain transaction volume, it's staying pretty low. I still think, compared to what we saw here and now, it's pretty clear that there's a lot less on-chain movement than there was. And that's a concern long term because, we can look at daily active addresses and circulation, beginning with circulation, since we just touched on it with this NBT model. It's still low. In fact, I mean, we see another bearish divergence here. I won't even go from the peak. I'll go from kind of just a, average line from a 30-day average back in November compared to now. Circulation's going like this, but price is that, right? So that's a concern to me. You want to see circulation going up the same way that prices, and same with daily active addresses, which admittedly is looking better. The 30-day trend is still pretty mediocre, but I do like to see that, this daily active address spike from yesterday, this was the best it's been since January 9th or January 10th. So we're talking about a 5-week or so high in address activity, and one of the highest over the past 6 months. It looks like it's the second highest in the past 6 months, which is a big deal. However, one singular daily active address spike can often actually indicate a reversal and a lot of profit taking, which we've already seen. There is quite a bit of profit taking going on. So take this with a grain of salt. If daily active addresses stays high, that could lend to the notion that prices can continue staying in this range or going higher. But if they immediately drop back down, it means that utility isn't really doing anything significant. It just means that there were a bunch of unique active addresses that reacted as a result of 25K getting breached, and probably a lot of limit orders, I would imagine, getting filled from people who were waiting and waiting and waiting for 25K to hit. Anything you want to say, by the way, Maxim, in terms of trading volume or utility before I keep going?
No, continue. I'm more interested when we get to the section of, if we get to the section today, whales or smaller whales behavior.
Yeah.
On different coins.
Yeah, let's jump to it right after MVRV and go through it. Just to give a quick update on MVRV, it looks like it's pretty much staying flat. 30-day MVRV is slightly positive at about plus 4%, but that's nowhere near the 15% that we typically need to see right around there before getting concerned. And it's funny because we did breach 15% in mid-January, and then prices ignored the fact that we were in a danger zone and continued climbing. So that can happen. Obviously, it didn't climb forever, and we did see that drop down. But yeah, 30 days slightly positive, and 365 days pretty much break even. Plus 1% is about as even as you're going to see for 365 days. So not really much concern, and prices can go either way as far as MVRV goes. Exchange rates, or funding rates, I should say, we already talked about the fact that it's pretty much break even right now for Bitcoin. Whale transactions, we have seen a big tick up in $1 million plus transactions. We're pretty much, this past week, this was the highest we've seen since the big FTX collapse. So that's definitely notable. It means that whales are engaging, and that probably has a lot to do with the increased volatility, probably the highest volatility we've seen since November. Because there's some big moves going on. And then, as Maxim mentioned, we can break down the tiers here and actually see, beginning with how many actual addresses are being created at the moment. Let's take a look. 10 to 100 and 100 to 1,000. they're staying pretty flat. 1,000 to 10,000, not many new ones being created. They're actually going down. 10,000 to 100,000 also staying flat. So really not much there at all. And then if we go by percentage held to see if there's a difference, not really. I mean, all four, from what I'm seeing here, Maxim, are staying relatively flat and not showing any major moves at this time.
Yeah, that's why I saw on quite a few coins. So I still don't know how to treat it.
Yeah.
But they've been increasing their position. Surprisingly, I would like to see them dump a little bit. It will mean that they think, okay, we next move it down, so we need to take some profits. But the lack of the activity, neither increasing nor decreasing, it's more bearish than bullish to my eye.
Mm-hmm.
But it's only one of the parameters, yeah.
Yeah, I mean,
you know what is the most bearish indicator that Cramer, I think last week he was. This is the start of next bull market.
What's
that? Jim Cramer.
Oh yeah, I know Jim Cramer. I'm just talking about the what was the bearish signal?
Yeah, he say you need to take it seriously. It's the beginning of the next big bull market, and you should take it seriously as a opposite. And lately, it was a few times already. Whatever he says, you still act opposite, but you need to wait 3 days. And then after the 3 days, we had this recent drop. And that's why I was saying, okay, no, correct. But it's already reversed. So I'm still thinking, we need to check if he's saying anything now. If he double down and say, we'll grow more, or what does he say now?
Cramer, see if he's even talking about crypto at the moment. He's got cats and dogs, promotions, more cats, Super Bowl. Certainly looks like he's been a fan of football lately, but I'm not seeing anything over the past week related to crypto. I do see 1 week ago, he retweeted that the SEC crypto enforcement sweep continues. Stay tuned for more. Sweep is still in its infancy. Kraken to discontinue unregistered offer and sale. Crypto asset staking as a service program. That was the big story from a week ago. So it looks like he just engaged with that a little bit, but yeah, nothing.
No big statements, lately. Yeah?
Right.
Okay. Well, we'll wait until he comes out, yeah.
Yeah, and the reason that Maxim is stating that Jim Cramer is such a good counter indicator is he really is kind of the bridge for a lot of mainstream potential investors and traders, people who are not following crypto Twitter or reading Santiment articles very often. They get their information from watching TV, especially the older crowd here in the US. And if Jim Cramer tells them it's time to buy, they'll say, okay, I watch Jim Cramer. I respect what he has to say. And then all of the small money, the novice money comes in that whales end up capitalizing on after waiting a few days to react to all of that novice money coming in. So there tends to be a short-term gain for what Jim Cramer says if he says something bullish, and then everyone says, oh, Jim Cramer is a genius. He made Bitcoin go from 23.2 to 23.8 in 2 days. Amazing, right? And then the long term is mainstream reporters like that end up causing FOMO and a better deal for large traders to capitalize on and basically take the novices' money and then buy back in after the novices sell their bags at a loss and rinse and repeat. That's crypto. Same with CNBC, MSNBC, a lot of the other channels, at least here in the US, that talk that bring up crypto when there's an extreme move, and then the opposite happens once they declare that we're in a bull market or bear market. But yeah, going off of a few more, oh yeah, while I was here, I wanted to show the whale transaction model because we can see that Bitcoin, it is seeing higher than average whale activity at the moment, with the 100K plus transactions being at about 84% on the 1% to 100% scale, with 50% being an average amount of whale transactions. It's at 84% over the last couple of days, so that's quite high. You can see MATIC right now being one that's really standing out, getting a ton of whale activity. Tether, that's very interesting to see, being very high. I'm looking for ones that have small numbers here because that's showing the 2-day average instead of just the very short-term 8-hour average. Gala seeing a lot. Ethereum seeing a lot too. Let's take a look at that really quick. Whale transactions, yeah. So these red bars here tell the story. Lots and lots of engagement going on right now, right at that top when it was, price very briefly went above $1,700 yesterday. This is the third largest whale transaction, I should say second largest, since the FTX collapse. So that's a big deal. As we mentioned, the last one, this was just like Bitcoin. We saw increased engagement. It started to look like it was going to be a top, but then it climbed a little bit higher. But whale activity got lower, indicating a top formation was coming. And then after it fell back down, it quickly bounced back up due to a variety of reasons like tether accumulation, BUSD, and now there's another big whale transaction spike. That's very interesting. Let's go back to Bitcoin for just a moment. So we touched on the ratio continuing to stay high between profits and losses. Mean dollar invested age, it's continuing to climb here. Not really much to be concerned about or excited about. It's just dormant coins continuing to stay dormant. We need to see a big drop down of some type to really validate the fact that a bull run will be starting in the near future, and that's not happening at the moment. Network realized profit loss, nothing to say there, fairly flat. Exchange flow balance, yeah, I mean, we saw this little inflow spike, so there was a slight climb as prices started to peak up just yesterday. But for the most part, supply on exchanges is still very close to a 5-year low. Yeah, it's actually below that point that it was at in October 18 right now. So we're definitely looking at around a 5-year low at the moment for exchanges, supply and exchanges. Social dominance, let's actually look at it from this chart where 20% has been adjusted to be the zero line here. And whenever it's below 20%, typically Bitcoin isn't being discussed enough. When it's below, that's a healthy market where Bitcoin is actually getting a justified amount of attention to allow prices to rise long term. So as you'd expect, the past 6 months has been very, very little Bitcoin talk relative to altcoins as people continue to chase pump and dumps and individual altcoins that might break out rather than just sticking with the tried and true BTC hodling method. If we back
so
it up,
it's a social dominance for Bitcoin, right? Yeah, sure.
Exactly. Yeah.
Do you have the same? Do you have the same for Ethereum?
Oh yeah. Let's take a look at Ethereum. It would have to be adjusted because the average for Ethereum, if we go over here, quick math check. So social dominance, if we put a 30-day indicator on it, let's go to the last 3 years. So if we look around here, I would say just eyeballing this, we're talking around a 10% social dominance being about average. So if I now go over here, I'm going to unlock the price, and I'm going to unlock this custom metric, and I'm going to change this from x1 minus 20 to x1 minus 10, click save. And now we can have a look at where
interesting
Ethereum's
how it is.
social dominance is. Right now it's below, so Ethereum is not getting as much social dominance as it has on average over the past 3 years. You can see when it was above, this often correlated with higher price movement. But it's not quite as compelling of a metric in terms of alpha as it is for Bitcoin.
I agree.
You did see this huge spike here, though, interestingly. This was its highest over the past year. But either way, I mean, Ethereum is more like an altcoin where the big spikes are more indicative of turnarounds, whereas Bitcoin's social dominance kind of works as kind of a fear and greed indicator, where a lot of social dominance means that there's some fear, little means there's some greed, and we'd rather see fear in the markets as a way for markets to go up. Funding rate, we do see a little bit of a spike. It looks like there are some longs on exchanges like BitMEX right now. That's worth keeping a slight eye on, but it's not an extreme funding rate spike by any means. And that's about it. We can also look at MVR. Oh, we already did really. It's mostly semi overbought or overbought. Touched on whale transactions. Why don't we open it up to some questions and let's see what Maxim and I can answer for the community.
Max, your turn.
For asset requests, we got a question for Chili's and for Wrap Bitcoin.
Sure. Let's take
actually look. Yeah, for both Wrap Bitcoin and Wrap that we could also eventually check other metrics or let's say derivatives. But we can do it also next week. It's okay.
Yeah, that's a good idea. Let's see how much time we're left with here. Chili's is an ERC20, so we have plenty of data on it. Let's zoom into the last 6 months here. And it doesn't look like there's anything special going on. We did have this big on-chain transaction spike, the second highest of the year on Valentine's Day. This often correlates with turnarounds, more so tops than bottoms. And we did have a little bit of a bottom here, or I'm sorry, a top right after this spike. So that made sense. Trading volume is staying quite low at the moment. So yeah, nothing too special going on in terms of trading or transaction volume. In terms of daily active addresses and circulation, staying very low. We had another random spike. This kind of makes sense and it correlates with the on-chain transaction volume spike. MVRV, let's see what we have here. So the danger zone for 30-day, which is this red line, we want to keep it right around 20%, which is going to be about right there. And we can see that the 30-day MVRV did go above it and stayed above it as prices were rising. So that was telling us, you know, even though Chili's was getting propped up by Bitcoin and so many other assets that were surging in this range, it ended up being squashed pretty quickly. We had one final leg up and then it went down again. It was saying that Chili's was not going to be one of those assets that went on a huge tear compared to the rest of the markets based on the fact that average trading returns were already so high. 365-day MVRV is right about break even at the moment, so it can go either way. Funding rates, very flat at the moment, nothing special. Transaction count, very low, almost non-existent at the moment for both 100K and 1 million. Now let's take a look at the whales and see what they're doing. So Chili's is priced at about 14 cents at the moment, just underneath that. So I would say that sharks are going to begin right here. And this would be kind of small whales, and this would be large whales. Let's put the price on there as well to see what kind of correlation these three tiers have. Yeah, so it looks like there was a lot of accumulation during this dip here in late December, early January, especially the red line. It looks like it's worth keeping an eye on.
Yeah, that looks quite substantial.
Yellow line, it did a little bit itself, and it's actually been kind of taking profit. These are the largest, or I'm sorry, the middle whales, and blue being the largest whales. So it does look like the overall trend over the past 6 months is good, because they were all quite low here in terms of addresses created, and they have climbed. Even the large whales, where there are 58 of them now, there were 48 6 months ago. The smaller whales, there were 150. Now there are 194. That's a big rise. And the sharks that hold 100K to a million chilies, they were at 846. Now they're at 949. So all three of these are up in the long term. I like the way that looks, especially considering price 6 months ago it's going that way, and whales, just by eyeballing the three tiers, they're all kind of going like that at the moment. So that's a bullish divergence, folks. Ratio of on-chain transaction volume and profit loss, nothing special. It's about break even at the moment, just as many profit takes as loss takes. Mean dollar invested age, take a look at this, Max. Lots of big movement here. I'm going to zoom out a tiny bit. Here's the last 3 years of Chili's. That's very interesting. Every time Chili's is making a run at like 350 days or more of average dormant coins held, it's like there's a big drop and a bunch of dormant coins are moved. There's actually just consistently a lot of big whale movement that seems to put a lot of choppiness in what normally is a pretty smooth mean dollar invested age line for most assets right now. So it does look like there's some interesting things going on. It's not a huge drop, you know, like this would be a lot better, where Chili's absolutely mooned back in March of 2021. But it's at least promising to see that their coins don't seem to want to get too dormant on the Chili's network. They constantly seem to be getting moved.
Yeah. From all metrics, this probably is the best one.
Yeah.
This all-time holders diversifying, redistributing means they're not confident. Why would they do stuff around? Unless Chili's introduced some kind of staking on farming, then it would make sense or would explain these movements. But I know too little about the economic to answer this question. In general, anyway, prices going up and down, and mean dollar invested age staying flat, or even probably now it's right to break down. It's a good sign. It's a good sign. The lack of dormancy is good, or like decreasing dormancy. And see net realized profit loss. So those who moved coins recently, they were bought at a higher price, which is difficult to believe. As those, no, it's easy to believe here because many times price very high.
Yeah.
But this metric looks good.
Yeah, and we're seeing there's a big drop in network realized profit loss a couple days ago. So that's interesting to see. It lends to a higher likelihood of prices moving up, just as we saw back in late June here. That kind of marked a bottom before prices rose very quickly. So a couple good signs there for Chili's. Also good to see that supply on exchanges is staying very low. This does have a lot of supply on exchanges relatively, with about 29% sitting on versus, you know, we look at Bitcoin at about 6.5%, Ethereum around 10%. Chili's does hold a lot more, and that makes sense because it is a very volatile coin. You're not going to see Bitcoin or Ethereum having these kinds of jumps. So generally when a coin is more volatile, there's more interest from traders in keeping their coins on exchanges to quickly sell and quickly buy back and quickly sell to try to ride the waves of volatility. Social volume and dominance, not much at all. Chili's is not really being discussed. It seems to only be, I would be very interested to find out what it was here in 2 months ago, mid-December, that caused the spikes to go so high. But normally it stays pretty low unless there's a big news story related to it, or the price goes nuclear like it did back here. And
yeah, looks like it was some terrible news or terminal panic.
yeah,
That's cool. That's cool. Quite a good reversal sign, yeah.
absolutely.
Did we have
sentiment.
around the time also H consume spikes? If you can select this area, this strong social volume, and see what happened, let's say 1 month before and after, related to H consumed.
So age consumed, we see in dark blue
shortly
here.
thereafter, yeah.
Yep.
Oh yeah, that's very good one, yeah. So altcoins moved. They got scared. I really don't know what was with chilies. I would like to know from the person who asked, what was it? Looks like something happened.
Yeah, I'm very interested in that. That was the biggest age consumed spike over the last 3 years, and it coincided with a local bottom. Prices then rose right after. I'm sure related to the market rise in general, but still very interesting. Weighted sentiment, as you would expect, the social volume is probably causing this to just not have much registering at all. When it's not talked about, weighted sentiment often goes through kind of a flat phase, slightly in the negative like this, because the equation is half social volume and half ratio between positive and negative commentary based on Santiment's algorithm. But that's about it on Chili's. Why don't we transition to the other? You mentioned an asset that started with an R, Max.
Oh, the other one was Wrap Bitcoin, and then
Rapid.
mentioned Aave.
What is Rapid's ticker again?
WBTC. WBTC. They mean, yeah, exactly.
Got it.
And actually, I wonder what can we look into it. It's a good proxy for DeFi utilization by really big holders and OGs and quite advanced users. Yeah. Yeah, can we see, I don't know, market cap for Rapid BTC? But it will be related to, no, doesn't make sense.
Okay.
I'm thinking, what could we see? Maybe supply and exchanges and distribution between big and small holders. I would see who's holding it now.
So supply and exchanges is very low at the moment. It looks like it's sitting around just over 4%. While back in September of 2020, we were at half of the exchange, half of supply on exchanges, even over half at one point. So it's just gradually over the last 2.5 years gone more and more off of exchanges.
It's good. It's good. It means if I understand how this metric is built, I hope it's not mixed up with just Bitcoin. Then it means most of BTC they simply used in different protocols, which most of the time means long term. Okay.
Social volume, it doesn't look like there's much. I mean, I don't think
No.
WBTC is ever really talked about much because it's more of a proxy for DeFi, as you said.
Yeah.
Weighted sentiment, it's kind of swung a little wild between positive and negative. I just, with the lack of social volume, though, I don't think there's much to it. Development activity, it's barely ever seeing GitHub activity. Mean dollar invested age, a little concerning. It has been climbing, Maxim, almost up to 400 days on average that coins sit in addresses right now. Zooming in just a little bit to get a better, clear image. Yeah, not a lot of profit transactions. It's a little above, maybe slightly below twice as many profit compared to loss, but I haven't seen many instances where this correlates much with the price anyways. Whales could be interesting. Let's take a look at the percentage held with WBTC priced at 24.1K. So We can basically look at the same ones as Bitcoin.
It's the same Bitcoin, yeah.
Yeah.
The only thing is there will be smaller hodlers who have a bigger impact as the market cap of wrapped Bitcoins is much smaller.
Gotcha. Yeah, it does look like they're pretty even. The 10 to 100s are moving up a little, but yeah, not much to say there. But yeah, wrapped BTC is always an interesting one to visit. You can see trading volumes a little up too. But thanks for that suggestion.
Yeah, I think, Brian, we'd better visit this topic not tomorrow, next week.
Yeah.
And we will do it together with wrapped BTC, wrapped ETH, and USDC, everything around what we have on our. I remember there was a request from Paul, and actually we do spend quite some time in our internal analytics lately looking into this data. It's quite interesting. We can dedicate to it sometime next week.
I like it. Yeah, I look forward to that. Are there any other asset requests?
No, not at the moment.
Okay. Why don't we just do one more that I would recommend we check out? I think we can look at, I want to look at MATIC, which has been on quite a tear, even when markets were correcting. On the 15th and 16th a little bit, I saw that MATIC was doing quite well, and you can see quite clearly it's at least a 6-month high. We go back to a year, and the last time prices were this high here at $1.48 was April. So we're at about a 10-month high now for MATIC's price. Obviously very impressive to see with trading volume supporting this rise. The latest day here, we see that trading volume is the highest it's been in over 3 months. So as far as looking for a bearish divergence, I'm not seeing one here. Volume is supporting the rise. Transaction volume is not really showing anything special, but that's not as big of a deal. Daily active addresses in circulation, definitely some spikes in circulation, but overall pretty average. I'm not sure if this was just a slight data loss in these 3 to 5 days here. But yeah, utility is looking fine. It's certainly a little bit higher than it was back in July through September. So that's supporting the rise mildly. 30-day MVRV, checking out to see if we're in a danger zone now. We're at about, we're at 20%. So we're pretty much right in what could be considered a danger zone. The spikes here, as you can see, clearly foreshadowed the top, but this has to be taken with a grain of salt because this is when the FTX collapse was. 30-day MVRV, though, still down. Negative 14% means there's still meat on the bone for prices to rise long-term a bit further. So short-term, not looking great. Long-term, still looking okay. Whale transactions. Yeah, we see some spikes going on. Definitely some profit taking happening from large addresses. Let's take a closer look in our actual supply tier breakdown. Price for MATIC is sitting at about $1.48 at the moment. So let's go down here and begin with the sharks that hold 10,000 to 100,000. They are taking some off, 100,000 to a million, same thing. 1 million to 10 million, same thing.
Yeah, that looks like they're chilling out for the moment. Now retail have to push it, and I'm afraid whatever retail is pushing, whales are dumped on it.
Yeah,
looks like MATIC for the moment not the best bet across crypto. As I said, if whale decided to take some profits, that's it. It's a good sign in the midterm. I mean, in 2 weeks we can come back. And I would say that we need to revisit this. Not next weekend. Let's check money metrics. I call them money metrics from our how hot or cold are different kind of monies on DeFi platforms. And then in 2 weeks we will visit MATIC. Could be a good time. Now let's say whales dump on retail for the time being, and then we'll revisit. Maybe it will be a good sign to buy.
Absolutely. Yeah, I think you said it best. It's kind of a good sign midterm, but we need to see if retail is going to hop on the bandwagon now with MATIC at a 10-month high. Network realized profit loss. Yeah, we are seeing some spikes as expected because it is decoupling from the market a bit. So that's a slight concern short term. In terms of social volume, yeah, like the crowd is beginning to recognize that there's something going on with MATIC. With the mainstream being more involved with MATIC, that does lend to a higher likelihood of a price top forming soon. Most of these social volumes have been pretty short-lived, but they are spikes moving higher and higher every time. So that's something you have to keep your eye on. This was a price reversal spike here, and this obviously was a price reversal going down here. So if you see a social dominance spike like this all of a sudden as prices are rising, it's almost a certainty that it's time to get out, at least short term, or take some profit. And no age consumed spikes at the moment, which is good to see. But yeah, you can see the social dominance 30-day trend is just continuing to move up and up. Weighted sentiment, not much to say there. Development activity, we don't have GitHub for MATIC at the moment. But yeah, that's about it. I just wanted to do a little bonus asset there, but I think we've covered a substantial amount here. Any other updates you'd like to mention on your end, Maxim, in terms of what we can look for over the next week?
This week is, right now it's really difficult. I'm split it. I still want to have a deeper retrace just to make it more healthy. But I remember from past years, sometimes market just doesn't give you a chance, and can keep pushing if you want. It looks relatively weak. So we will see next week the usage of money on our. I found it quite to be quite useful lately. For now, for whatever we've been like on our team treasury, we've been accumulating it around the lows, not exactly at lows, but around the lows, and we still keep it here, just for the sake of general thesis that we are in 3 to 6 months bull market, which we formulated this thesis I think a few months ago, even before it started. So I still think the 3 to 6 months recovery from crash we had last year on the card, and it just can keep pushing. That's why we didn't decrease our Ethereum exposure yet. If this is help for others, this is our stance. But definitely I can't exclude sudden move down.
Absolutely. And I recommend keeping an eye on funding rates too. I think they've really told the story over the past, pretty much since the start of the year, where traders were shorting a ton to start the year. Those shorts got liquidated and they helped provide rocket fuel for prices to go up further. And then everyone started getting long just a couple days ago after the Valentine's Day surge and people getting excited. And we had one final leg up and then prices dropped big time for Bitcoin and a lot of altcoins. So yeah, watch to see if perpetual contract funding rates start to get some greed signs. I don't think this is really a greed sign right now. They're just very mildly in the red on almost all assets.
True.
But yeah, watch that one for sure.
Yeah, true. Once we see here greed, then it's a strong sell side at the moment. If you accumulate it, I would keep. If I would buy new, I don't know. But I would not short. Short it is. It's not enough evidence to short the market.
Yeah. So as weird as it is to say, guys, to address what the title of this stream was about, it is very volatile right now, much more than I've seen in a long time. And when that's the case, sometimes you have a quick trigger to sell or buy when you get too excited or too fearful. But honestly, as Maxim's saying, the best thing to do may be to kind of sit on your hands and just wait for metrics like funding rates to become a little more clear, or utility to become more clear, social dominance for Bitcoin to get a little more uniform in one direction, stuff like that. But I hope that helps. And throughout the week, you know that Maxim, myself, and many of our staff are here to help wade through the metrics with you and figure it all out. So use us. We are here to assist and make sure you are happy with the platform and enjoying and getting full use out of everything that Santiment offers. But with that said, you know, Maxim, thank you for joining for a great call today. I hope you're having a good February over there in Europe.
Yes.
And let's reconvene in about a week, okay?
Yeah, thanks for leading the call, Brian. Talk to you next week.
Thank you, thank you. Take care, everybody. Stay warm and have a happy weekend.
Yeah, thank you. Bye-bye.
Bye-bye.